Whether it be in trading or just in your day-to-day life, there's one voice that always holds us back, that always tells us to make the wrong decision. And this voice is called ego. Ego is that voice when you're holding a losing position that tells you to double down, that tells you to add another position, that tells you to double your risk so you can make up for your previous loss, that tells you that you have to be right today. That voice held me back for the longest time. And in this video, I'm going to be teaching you how to personally conquer ego. And not just conquer it, but use it to your advantage. There's two sides of ego, and if you don't control it, it's going to cause you to lose. But if you can control your ego, it's going to cause you to win like you've never won before. So let's hop straight into the charts, and let me show you exactly where I personally struggled with ego and how you can foster it to help you in your trading career. We are going to start by defining what ego is in the first place. Now, if you wanted to learn about ego, you could have just picked up a book or watched a video on generically what ego is. But you clicked on this video because you wanted to know how ego applies directly to the markets. And that's what I'm going to be teaching you in this video. So let's first define ego in the markets. What kind of scenarios do we have when our ego shows itself the most? And the first thing that came to my mind is overconfidence. We become overconfident in the market when we begin to take a series of wins. Maybe we get to our first payout, or maybe we just barely pass a funded account or flip our live trading account. And when we see this kind of success start kicking in, that's when our ego kicks in, because our ego tells us we did this because we're this and that. We're the best trader in the world. And then you start thinking of all the different scenarios of I can get rich, I can print money out of thin air, I can just keep going, I can keep trading. And that's overtrading. Overtrading is when your ego tells you that you're the best trader, that you can't lose because you figured some system out, you created some model, and this model may show itself a few times per day. But you shouldn't always be trading regardless, because that's the way the market is. The volatility can just die down and the market will end up moving sideways like this. And you won't really be able to capitalize on anything. And your ego tells you to keep trading. And inside of a range like this, once you start adding some size to your positions, you're going to lose the money that you made. And that's one of the first things that ego is going to cause you to lose big. And that's the fact that it'll give you confidence. It'll tell you that you're good. It'll support the existing bias that trading really is that path to financial freedom. Trading can put you in a bigger hole than you were even before you started trading. So the first step to conquering your ego is to focus on what ego is in the first place. And to define that in trading terms, ego is overconfidence. Ego is overtrading. And that comes from the overconfidence that you have in ego. Ego is the voice that tells you that you have to be right in the market that day. You have to walk away with some money. And that's going to bring us to the second lesson of this video. The biggest misconception that everyone on social media gives new traders is that they'll make everything back when you become profitable. Because the thing with becoming profitable is once you actually start making money, it's true. You'll start making a lot of money and fast. And you'll probably make back everything that you might have lost over the years. But that's not something that you should be thinking about. That's not a mindset that you should be coming into the market with. Because when you believe, hey, I'm taking this risk right now, but once I become profitable, maybe this is the time that I become profitable. And once I pass this account or once I hit this trade, I'm going to make a ton of money. I'm going to make back all my losses. When you have that belief, it's this belief. One trade will make back all my losses. This belief right here will actually crush you because you're going to come into the market taking more risks than necessary. You're I'm going to make back all my losses that I've ever taken in this trade. Or once you finally get that funded account, you're instead of aiming for that 1 or 2% and making money on a month-to-month basis, you'll be thinking about all the losses. You'll even pull out the calculator and calculate how much you've lost over the years. You'll count how much each account costed or how much money you've tossed into a live account and blown. And that's the goal that you'll go for. You'll try to make back all the money that you've lost. And instead of aiming for a realistic 1 or 2% per month or per week, you'll aim for that 25% that you've lost over the years. And that's going to crush you. That's going to lead you to blow your account because you'll have, even sometimes I've had $4,000 or $5,000 in an account. And because I've lost $7,000, I wouldn't take that money. I wouldn't take that money because I wanted to make back all my losses right then and there. And that's greed. That's greed because there's so much money in front of me and I wouldn't take it. And countless times I've done that. And that's why I'm trying to teach you guys that you don't have to do that because you'll make the money back. Remember, this isn't a one one and done. Like, you're not going to take one trade and then quit. You're trying to do this as a career for the rest of your life. So you have to genuinely conquer all the mistakes. You have to understand that you're going to have a setup the next week. You're going to have a setup in the next month. So take the money that you have on the table, take it off the table, and just relax. Reflect on what trades you've taken. Reflect on the good things that you've done. Reflect on the bad things that you've done. And learn and keep going. But when you hold on to the things that you've previously lost, it's only going to dig you into a deeper hole. And the misconception that people talk about is that you're going to make it all back in 1 month. And when you have that, you're going to make a lot of mistakes. You're coming into the market trying to make it all back in one trade. And then when we apply that to a day-to-day trading context, it's like you're looking for buys, right? First trade right here. You bought, you didn't close the position, it ran down, took you out. You bought, you didn't close the position, it ran down, took you out. And you're going to keep doing this because you're aiming for some goal. You're aiming to take some money. But each of these moves right here, they swept high and you could have gotten out of your position. Maybe you were up $500 here, but you lost 1,500. Then you're going to be aiming for 1,500 instead of just taking the money that you had here. And that's going to cause you to lose more money than you would ever make because this isn't a healthy way of trading. You're not going to make back all your losses in one trade. Like, sometimes it's just not going to happen. And on that second loss or third loss, you should genuinely take a step back. One of the things I do is I just go for a walk. And when I come back for a walk, like, I'm not on the charts on my walk. I actually don't even have service in my neighborhood because we're up in the mountains. I genuinely can't even and look at the charts. And I'm just thinking about how dumb was it that I just did that? And you guys should do the same thing. Take a step back from the charts and really evaluate. Is your narrative even correct? Because maybe the market is actually going to be moving down and you're looking for buys. So what you should do is you should just step back out. You should scale back out and really think about, where is the market going right now? Am I even correct about what I'm aiming for? And that's going to help you avoid so much losses. Now let's hop into the third lesson of the video. The third thing I want to bring your attention to is trying to beat the market. The moment that you start trying to beat the market, that's when you've already lost. No matter what kind of setup that you have in your system, if the market has an algorithmically set target to go up higher that day, even if you get a short setup, you're going to lose. You're going to lose. So if your ego is telling you, no, I'm right, and it gives you another short setup, that's going to happen. Like for my model, for example, my model is based off inversion for value gaps. Now, my model is based off the 30-minute time frame so that I avoid this kind of thing. But if you're trading the 1-minute time frame, like a lot of beginners make as a mistake, if you're trading the lower time frame and you're aiming for a big objective, you're not going to get it. Now, like I said, my setup revolves around inversion for value gaps. If the market closes below this gap, then I'm going to be looking for shorts, right? And that's going to happen even in a bullish market. Like, look at how much times it's already happened right here. Here we have another example. It closed below this one and then ran down a little bit, but it didn't sweep out the low. Another one, it closed below this one and it ran down a little bit, but it didn't sweep the low. That's because the market wants to move higher, and I'm going to get my short setups. Now, if I continue to convince myself that it's actually going to go down, I'm going to keep placing trades when I get my short setup. You have to have a system in place to prevent that, as I mentioned. When you try to beat the market because your system is showing itself, you're going to lose. You've already lost because you're not going to push the market down with your setup. The market's going to move up, so you have to, once again, take a step back, reevaluate what you're doing, and genuinely, stop trading. You have to stop trading. The only way to realize this is to stop trading, because as soon as you take a loss, what I did at some point, it was probably the worst thing that I've ever done, is I'd always want to be in a trade. As soon as I take a loss, I'd enter another trade in the same direction. And that's when I lost the most money that I've ever lost in my trading career, is when I would take a loss, I'd get into another position right away, same direction, or I'd flip it. But I'd always want to be in a position. And it literally took me a few days. And when I blew that account, it took me a few days to recover from that, because I was bro, I'm not even trading anymore. That was just gambling. That was just pure gambling. Because I had goals, I had ambitions, I had things that I wanted to work for, and so I'd keep entering because I wanted to make money. I had things to work for, And when you set those ambitious goals, like you want a car or you want to move out, you want to pay your own bills, when you set those kind of goals, like monetary goals, you're going to want to make a certain amount of money. And when you do that, like if your job is trading like mine is, like the only thing I do is I trade. If my job is trading and I blow my account, I'm out of a job. I'm out of a job until like I can deposit more money in an account, right? But I'm out of a job that day. And that's the kind of like mindset that I have. I'm basically firing myself if I make a stupid decision. I'm firing myself and I'm preventing myself from making any money in the next few days. Like there could be a setup tomorrow, but if I blow my account today, I got fired today and now I have to search for another job. That's the kind of mindset that you should have. Because if you genuinely make a dumb mistake, you're taking yourself, like the ability of making money, away from yourself, and you can no longer make an income because you don't have an account to trade on. So that's the way you have to think about it. You have to preserve your capital, because if you risk it all in one day and you have no other sources of income, you're not going to have a job anymore. So focus on that. The third lesson is stop trying to beat the markets. And I added another lesson for you guys in there, which is to think about it like that. Put yourself in the analogy of this is your job, and when you blow your account, you are firing yourself from making money. You're getting fired and you're not going to make money until you deposit more money into an account. And I would not recommend that. Do not deposit more money into an account the moment that you blow it. Because you're just going to try to trade. As soon as that deposit hits your account, you're just going to trade. And I'm not pulling this out of like my cheeks, guys. I've been through this. I've done this. I've tried everything because like I'm young. I have goals. I want to have a supercar. I want to buy more properties. I want to live my life. I want to travel whenever. And I have all these goals and things that I'm holding on to. I want to take a next step in my relationship. All this stuff that I'm holding on to, it's holding me back. Because I'm going into the market with greed. I have a monetary goal. And that's going to bring me into the next lesson of the video. And that next lesson is going to be focusing on the monetary goals, your ambitions, over the process. And the process is, once again, not trying to beat the market. But you're coming in, you're looking for your setup. You have that system in place that's going to tell you what to do. If you don't have that, then you're going to come into the market trying to make whatever money that you need to achieve your goal. Whether that be $200,000 or whatever, right? You're going to try to make that money. Or if it's a smaller amount, that makes it even worse, right? So let's say if you make $4,000 from trading, that's amazing, guys. That's from the markets. You're printing money out of thin air and you're making like a good amount of money. Now, if you all of a sudden have a $5,000 bill to pay, then you're going to try to aim for $5,000. You want to make $5,000. And what is the difference from 4 to 5 really? It's not much. But that one trade, the moment that you're at 4,000 and you try to take one more trade to get to 5, and all of a sudden you've lost like $500. Now you're at 3,500, less than what you've normally been making, and you're going to want to make that back. You're going to want to push it back to 4,000, and that's when you take another loss that day because you're wrong. Your narrative is wrong. You took another loss. Now you're at 3,000. You were at 4,000. You're absolutely beating yourself up because you've been pulling out 4,000 in the last few months, and all of a sudden you've just blown your opportunity to pull out 4,000 again. And you're going to take another trade because you were at 4,000. So you're like, okay, I'll at least make my 4,000 back. Boom. You're now in the cycle of focusing on the monetary goal instead of what the market is telling you. And the market is telling you that it's not tradable that day because you're looking for sell side and it's running up. You're looking for sell side and it's running up. You're not going to get a setup. You're only going to lose money. And so you're not going to make back the money that you wanted to make, that you would have been happy walking away with, and you're going to lose the money that you've already had. One of the key and most crucial mistakes that people make is coming into the market with some ambition. Not ambition, but like goals, monetary goals that you have to make a certain amount of money. Because you're supposed to focus on what the market is telling you. The moment that you start focusing on some goal that you have is the moment that you're going to lose the money that you made that day and some. So avoid blowing your account by focusing on what the market's telling you and not what you want to make for the day. Thank you for getting so far into the video. I just wanted to say that whether you're trading the same trading system as me or something else entirely, we can all agree that it doesn't really matter. What matters is that you have the right psychology to succeed as a day trader. And what I aim to do in this video is identify the things that personally held me back when I was struggling as a day trader. And I hope that you guys maybe learned a thing or two that you may have not known that was holding you back. And if you did, please drop a comment. And if you like these kind of videos, drop a subscribe, and I'll catch you guys in the next video. See you soon.